All right, my friends and enemies, welcome to the ICT Explained series, and in this one we are going to be talking about changing state of delivery. So without wasting any more time, let's begin. All right, so before continuing, please pause the video and read all of this, as it's very important. And to start off this video, we're going to be talking about identifying the change in state of delivery, or CISD. Okay, so before I get into the whole topic here, I want you to look at this video from ICT himself. It's one of the many videos I used to create this presentation for you guys, but I think it's very important that you hear what he says. Obviously, if you don't understand it, it's okay. I'm going to explain everything regardless, but I think it's still very important that you take a look at this video.
Maybe the dollar might want to complete this on Thursday, but Thursday is what day of the week? That's the day that generally caps the weekly range. Now, when it doesn't, Wednesday could always be a factor. Now, here's one of the takeaways from this lesson today, because we're talking about weekly profiles, completing PD arrays. In other words, we traded up into a premium array that we were anticipating as an upside target. We were inside the volume imbalance, then we noted the gap, and then we have all of these signatures completing, consequent encroachment. The question is where does the interbank algorithm change its state of delivery from bullish to bearish? Yes, we've seen the break in the market structure there, but when does the algorithm actually change its state of delivery? Last up closed candles. Notice this candle's close is higher than this one over here. Even though this one wicks through, this is the order block. These three consecutive up closed candles, that is your bearish order block. The opening price there, if price trades below that, which it does right there, that is exactly when the change in the state of delivery occurs. So we had a bullish delivery, and then it becomes bearish right there at that moment. That right there is what makes the order block an order block. It's not just an up closed candle or a down closed candle like all these yahoos on Instagram, YouTube. Everybody wants to say it like they're informed, but they have no idea what's going on. Zero. But this change in the state of delivery, the algorithm is now changing gears and now moving the price lower. Not buyers coming in or sellers coming in and influencing the market because of their pressure. That's not what this is. It's the changing of the state of delivery, which occurs right there. Now, that's not the only one. You have a secondary one right here. So we have an up closed candle, again, prior to this decline. So this is your bearish order block. This is your bearish propulsion candle. Okay, so this propulsion block eats into this bearish order block, and then we have a change in the state of delivery again, right there. Now, when that occurs, yes, we have a fair value gap there that can come back up and trade into that, but it's not likely to. And you have to have two procedures that begin at that moment. Always anticipate the likelihood of this coming back up in the fill, but I'll show you what you have to do in terms of hierarchy for logic. Okay, so from a programmer's stance, and also how the algorithm will refer to these PD arrays, this could always be a bearish order block that's traded back up into. But all of this narrative here, we'll cancel that out in a moment as I go back through with you. So the change in the state of delivery going lower begins right at that opening price on this candle. As soon as it trades through it, now the algorithm is delivering on a sell side. So basically, the algorithm enters a sell program. Once this occurs, price will start to go lower, attacking what? Any imbalance or sell side liquidity. Now, looking left of this opening price, where is there an imbalance? Because it's already seen it trade down, came back up, and then we came down again, and came back up again, and then left it. So it's not coming down to get an imbalance. It's going down here for liquidity, sell side liquidity. But now that run on the sell side liquidity coupled with the PD arrays that's been complete up here, and we have changed in the state of delivery, we can refer to this opening price and this new low. This right here is an IPTA data range for dealing. So in other words, an IPTA dealing range. So we're looking at the opening price down to that low, trades back up into that daily bearish order block and sells off. Opening price on this bearish order block, drawn down to that low. I only extended it over to the right so that way you can see how it trades up into optimal trade entry. So at the 62% tracement level there, we are definitely inside of a premium relative to this opening price and that low. So it trades back up in. Now, if you pull a fib from, say, this high to that low, you do not get an optimal trade entry. But I taught you recently using where the market changes its state of delivery. If you put your fib there and anchor it down to your swing low or up to your swing highs, you'll see the Fibonacci's line up perfectly for optimal trade entry, which is why it is dubbed optimal trade entry. It's not the golden zone, okay, where everybody knows about the 79% tracement level and the 62% retracement level. That's not the magic. The logic is understanding that we had a breaker over here that completed at a premium array. We gave it the possibility, or anticipated it rather, continuing on Thursday, and then maybe Thursday creating the high of the week as it trades up into the remaining portion of that volume imbalance premium high. But it didn't do that, and we'll come back to that in a moment. Now we're going to look at the secondary change in the state of delivery, which is this low here at the opening price. There. When it creates that up-close candle, draw your fib from that down to the low, same thing. You get essentially the 70.5 level, but optimal trade entry nonetheless. Market breaks away from that.
All right, so for this first part, let's begin here. ICT has mentioned in different videos that one candle doesn't count and that it does in others. So just as a good rule of thumb, having more than one candle is best for finding reliable changes in state of deliveries. Now, obviously guys, nothing is set in stone when it comes to trading. I'm just telling you what ICT says, and then I kind of give you guys my opinion. So there are times when one candle is more than enough, but I do prefer to look for more than one candle, and that is something I would recommend you guys to do as well. Okay, now as you can see in this example here, you can see I've marked up 2 candles, right? And then on this one right here, I have 3 candles, right? So just like I said earlier, as a good rule of thumb, look for at least 2 or just more than 1. Okay, at least more than 1 is a good way to start. Now he also mentions that once price trades above/below the change in state of delivery, then those candles turn into an order block. Now that doesn't mean price will react from said order block, but it can. Okay, so here you can see in this example, once price closed below the opening of this candle right here, you can see that it turned it into an order block. And what did price do afterwards? Came back up and retraced into it and reacted off of it, continuing its direction down. Now here you can see that once price caused the change in state of delivery here, price did not retrace back into the order block and it just kept going back up. So that is why I say that just because it turns into an order block, it doesn't mean that it's always going to get retraced into it. Okay, now when there is a failed sweep of the recent high/low that was created after taking out an important level, then that means the first set of candles are still valid. Now what I mean is this: let's say price comes down, trades into an important level. Now you're going to look for your change in state of delivery to go back up, right? Here you can see that price did not cause the change of state of delivery that I was looking for here, but what did it do? Came back down here and it failed to sweep this low right here. Therefore, because this low did not get swept, these 3 candles are still valid to me. Now if price did sweep this low right here, then I would have used these 2 candles and look for my change in state of delivery there. All right, that is one way to look at it. Now you don't have to look at it this way, but I do recommend it in case you don't want to miss your entries, right? Or if you want to get really good entries. Okay, now ICT uses the bodies for change in state of delivery. I prefer wicks, but it's up to you. Now here, as you can see, I have the body of this candle right here, the opening of this candle right here, and on this example I have the wick marked up waiting for the change in state of delivery here, right? And you want the body of the candle to close over it, regardless of whether you're using the body or the wick. You want the body of that candle to close over it to validate that change in state of delivery. Okay, all right, now you don't have to, again, you don't have to use the wicks or the bodies. It's all up to you. You can use whatever you guys want. Just make sure you back test every single thing I recommend. Okay, that is the one thing I will always recommend everyone to do, and it's to back test. And if you're looking for some good back testing softwares, check the description down below. I have a couple of backtesting softwares that I recommend and use, so check them out. There's also some discount codes attached to those links, so you'll definitely get a little bit of a deal. and support your boy's channel. That's all. All right, so for this next part, we are going to talk about when CISD matters. Okay, so please do not skip this. I'm going to go into it in some pretty good depth, but I will also explain things that do and don't matter. Okay, so with that being said, let's begin. Okay, so change in state of delivery, CISD, comes into play under several conditions. So the first one, candle overlap. The candle body must close over the body of the candle it is overlapping. If it closes over the wick or body on the first attempt, that is considered even better. The fewer candles it takes to close over the overlapping candles, the more significant the signal. Number 2, price interaction with key levels. CISD is best used when the price taps into a point of interest, POI, or a price delivery array that's on the higher or same time frame. Okay, so this is very easy to understand, guys. If you don't know what PD arrays are, just look at my previous ICT videos. It's super easy to understand. Number 3, market structure shifts. Changes in state can occur in connection with market structure shifts, displacement, and fair value gaps. All right, so yes, changes in state of delivery can occur at any moment in any place when it comes to market structure, especially when you're having market structure shifts. Okay, but definitely keep an eye out for those fair value gaps and even the displacements that come with the fair value gaps. Number 4, flexibility across models. A CISD can occur regardless of whether you are waiting for a market maker sell model or a buy model, as it is tied to specific price actions rather than rigid adherence to one model. So I'm not saying that changes in state of delivery don't occur in market maker models, but what I'm saying is the whole point of change in state of delivery is that it doesn't have to revolve around only market maker models. Changes in state of delivery can occur at any moment, at any time. All right, ICT talks about this. You can see all the videos that I use, and if you look at the videos where ICT talks about change in state of delivery, he himself tells you that this happens at certain key levels, but that it doesn't really have to wait for market maker models either. All right, now number 5, collective market behavior. Changes in the delivery state can also arise from natural market dynamics, such as shifts in supply and demand without direct involvement from market makers. Number 6, multiple changes in state of deliveries. So there can be more than one CISD occurring, giving traders multiple opportunities to identify shifts in market dynamics. So that is the amazing part about this, is that even though you might have missed the first CISD, there's always another one, right? And then another one, and then another one. Just make sure you're getting in at good times before price reverses on you, or reverses when you're trying to enter. Okay, now if you have any further questions or need clarification on specific aspects, please feel free to ask. Let me know down in the comments, join the Discord, DM me, do whatever you have to do to get a hold of me. I'm pretty responsive, so there should not be a reason as to why you don't understand anything or any of the stuff that I'm telling you. Okay, all right, so chapter 3, what trading windows does CISD work best in? Now in this portion, I will be talking about the different trading windows that I think it's best to use CISD in, just so you can get a little bit of a better result or a slightly better edge. So with that being said, let's begin. Okay, trading windows with high liquidity and volatility. The change in state of delivery functions best during trading windows with high liquidity and volatility, as these conditions amplify price movements and provide clear signals. Ideal windows include market open 9:30 a.m. to 11 a.m. This period is characterized by high trading volume and sharp price movements, making it easier to identify CISD patterns. The next one is market close, so 3 p.m. to 4 p.m. Increased activity near the close often leads to significant price shifts, ideal for spotting momentum reversals. Kill zones and macros. You can use whatever kill zones or macros you want, but it's best if traded during the London or New York sessions when doing so. Next is economic news releases. Times of major announcements like interest rate decisions create volatility, which can trigger CISD events. Now, you don't have to be confined to just these market windows. You can use whatever market windows you want, but as always, backtest them. Make sure that you know that your strategy is going to work instead of testing it out on a live account, which is just ridiculous. Okay, so for chapter 4, I will give you a couple of examples how you can trade with CISD. So make sure you pay close attention to this part, because there are a couple different ways you can actually implement this with either current trading strategies or even future ones. All right. Okay, so for this first example, I will actually be using the optimal trade entry Fibonacci settings that ICT uses in the video. So first, what is price doing? Price is going down. First, it's bearish, right? We have some bearish price action, and finally it reaches a PD array or an important level. Now remember, this can be on either a higher time frame or on the same time frame that you are trading in. Whether you're scalping or swing trading, it doesn't matter. Just find a PD array. Next, what does price do? It sweeps it and starts going back up. And now what do we want? We want a CISD from these 3 candles, specifically on this portion right here, right? We want it to come over the opening of this bearish candle. Finally, price closes above that opening, turning this into an order block. Now you can mark up the order block from wick to wick or from body to body. In this case, I just used the bodies. Then what did price do? Quickly taps into the order block and starts going back up. Now notice, I anchored the fib just like ICT did from the opening of this candle, right, or the change in state of delivery, to the recent high. And what does price do? Price retraces perfectly into the OTE, right? If I were to have drawn the fib from this low to this high, price would not retrace into it and I would have missed my entry. So what does price do? Tap into the 0.62 level, and you could set your stop loss either at this part of the order block, right, the edge, or the CISD, or you could have put it right here in the middle of this order block or at the bottom of the order block. It's up to you. And what you could target are imbalances, some liquidity pools, higher time frame levels, or even standard deviations with or without PD array overlap. In this case, we had a liquidity, or a little bit of liquidity, resting over here right near this standard deviation. So with this standard deviation overlapping with this PD array, that could have been also an easy target. But there are many other things that you guys could target, whatever you want. Just make sure you backtest it. Now I have some quick notes here. When a CISD creates a fair value gap, price is more likely to retrace into it unless there are other liquidity areas or fair value gaps to target first. If such targets exist, the fair value gap formed by the CISD is less likely to be revisited. So if a fair value gap is present while you are getting your CISD and you have some liquidity nearby, price is more likely, at least according to ICT, to target those areas of liquidity, or those areas that are more likely to be targeted first before actually retracing into the fair value gap that was created during the change in state of delivery. But in this case, since there wasn't anything major nearby, what did price do? Refilled in that fair value gap while also tapping into that order block, right? Next, you can simply use CISD as an indicator to whether the trend has shifted or not. So a lot of the times you can actually just use CISD to know whether the trend has shifted or not, instead of just using it as a form of an entry. Okay, so you'll see an example of this later on, but just so you understand, Yes, CISD doesn't have to be used as an entry method. It could just be used as an indicator of whether the trend is being shifted from bullish to bearish or bearish to bullish. And lastly, you can also pair this up with other entry methods like unicorn models after CISD has happened. So once you get that change in state of delivery or that change in trend, then you can start looking for something like a unicorn model for your entry instead of just relying on the CISD. Okay, it's that simple. Okay, so for this example, I am going to keep it very, very simple. Remember, there is more than one way to trade, so just keep that in mind if I don't get overly advanced with my examples. And yes, you can use this with any trading model of mine or ones that you are currently making. Again, this is just an example of the many ways you can trade with. So I am using HK50 as that is the asset I have been currently backtesting, and I thought it'd be pretty interesting to use for this example. So here I've marked out a 1 hour low. Now I am taking into account the overall trend. Lately it has been pretty bullish, so that is why I am looking more for a price to go from internal resting liquidity to external resting liquidity. So hopefully price comes down to this 1 hour low, and I'm not going to wait for anything crazy. I'm just going to look for a rejection off of the 1 hour time frame. Just one simple rejection is more than enough for this specific example. And then I'm going to drop down to the 5 minute. Now in the 5 minute time frame, I am going to look for my change in state of delivery, and for this example I will be sticking to the bodies themselves just because I want to stay consistent with some of the teachings from ICT. So here I am going to wait for price to close over it. Okay, so we finally got that body closure. Now once the body closes over it, you can either wait for price to retrace into the fair value gap that it creates, or you can just enter off of the first candle that closes over the change of state of delivery. And if the candle's pretty big, like in this case it's a nice big candle, you can use that as a really good signal to enter. So just keeping it simple, I will enter here, and if you want we can go to the 15-minute time frame and just target some 15-minute highs or 15-minute liquidity pools, which would be this one. Okay, so let's go back down to the 5. Stop loss will be under this low since the change in state of delivery happened pretty close to the low here. So I'm just going to keep it down here. We'll target this high right here and then hit play. And obviously guys, I cherry pick all my examples and you know this. So we're just going to wait. Okay, so I think price, yep. So there it is guys, that easy, that simple. I will give you guys another example, but this is just to show you how easy it is to implement change in state of delivery and how effective it is, especially when looking for changes in trend. All right, so let's move on to the next example. All right, so for this example, again, I'm going to keep it very, very simple. So I'm on the 4 hour time frame here on GBP/JPY. Now all I want is for price to again come down, tap into that 4 hour liquidity that I have down here and reject from it. All right, so price rejected from this 4 hour liquidity, and I'm going to drop down to the 15-minute. Now for this 15-minute, I want to have a change in state of delivery from this area, right? Okay, once that happens, that will then help me confirm that the trend has indeed changed. So let's wait. Okay, so we have that candle closing over this specific area. Okay, this specific area right here, and what I want is for a unicorn model to form. So what do I have here? A breaker block, right? And a fair value gap right here. Okay, bullish fair value gap. Awesome. So now that I have my unicorn model, what I will do, set my limit order here, and you can put it under the breaker block if you want. It's up to you. And we'll just wait for price to retrace into it, and I'm going to go for just a strict 2R. So we're just going to let price do its thing. Taps me in. Okay, great. Bam. Easy freaking money. So remember, guys, like I was saying earlier, you can use change in state of delivery to simply confirm the change in trend, and then from there you can find your other entry methods, and this is just one of the ways that you can do it. All right, very simple. All right, so thank you so much for making it to the end of this video. I know it's a lot to handle sometimes, but I still appreciate it nonetheless. And as always, I like to leave with a little bit of biblical wisdom, and this is from Isaiah 40:31. But they that wait upon the Lord shall renew their strength. They shall mount up with wings as eagles. They shall run and not be weary, and they shall walk and not faint. Ladies and gents, whatever you do, do not stop trying. Keep pushing, keep moving forward, keep trying to reach those goals. If me, someone who had everything against him, the whole world pushing against me, God was still able to work a miracle in my life, and now I can proudly say that I am a profitable trader. What excuse do you have? You literally have everything at your disposal. I'm giving you all of my knowledge for free. Okay, I don't know many trading mentors that do this or that will ever do this, but rest assured that you are getting the best of the best when it comes to my content and when it comes to learning, trading, or everything about trading in general. So thank you so much. Don't forget to follow me on all social medias. Join my Discord. It's free. I don't charge anything. There is no paywall in there. It's just you and me trying to make it in life together. With that being said, guys, thank you so much, and I'll talk to you in the next one. Peace.